Hey everybody, my name is Matthew Sambanis. I'm a certified public accountant. My firm is based in Long Island, New York, and in today's video we are going to discuss new home sales plunging 5.5% month over month, especially when you compare it to the previous year. When I say plunging, if you take 5.5% monthly and multiply that by 12 months, that's 60%. Huge number. We're also going to discuss what this means for housing prices. We're going to discuss mortgage rates, whether you should rent or buy. We'll touch on that briefly. What you should do if you are looking to buy a new house, or at least what I would do if I was home shopping again, where I think interest rates are going, and where I believe home prices are going. So let's get rocking and rolling. This is from the article that I found it on, and again, it was all over the news, but very straightforward. New home sales hammered in October as home builders hit the wall, prices plunge. Basically, housing affordability is at its lowest since 1980, and to use some staggering numbers, before the pandemic, you used to have to make about 70 to 75,000 in income per year in order to be able to buy a house. That number is now up over 50%. So now you have to earn about 115,000 per year to be a first-time home buyer. And another ominous sign is the Mortgage Bankers Association Index of home purchase applications tumbled to 120, which 120 doesn't sound like a bad number, of course, but when you consider that's the lowest level since 1995, that's horrendous, right? That's absolutely horrendous. And mortgage rates hit 8% for the first time in 23 years in October. So what we have here is a shift of Federal Reserve raising rates due to massive inflation that they caused. And inflation is the printing of money, and the printing of money creates more demand, and it doesn't necessarily create more supply, and therefore inflation is now finally hitting consumer goods, and it hit home prices as well. And when you have interest rates artificially low for 20 years, as we have had, you end up with home prices and other assets and other everyday expenses going through the roof. So what's also worse is in September, they reported that new home sales jumped up 12.3%, which sounds great, but then they revised it down to 8.6%, which is a huge revision down. And what that also means to me is that this initial claim that they came up with, saying that the home prices plunged 5.5%, there's also the possibility that that could be revised down further. I mean, granted, it could also be revised up, but in general, the government is notorious for revising numbers the following month in a poor fashion, not a good fashion, right? So basically, home builders, right? Because nobody's selling their house now. And the reason nobody is selling their house is because I have a 2.5% mortgage rate. And if I were to go buy a new home, and I financed it, I would end up paying 7, 8, 9% for my mortgage, right? And do I want to do that? No, that would basically be suicidal. So people are staying put. They know that unless they take the equity out of their house and they make a move sideways or downwards, or, with the equity coming from their house, that they can go buy something with, and not have a mortgage, then it's worth it. Otherwise, it's not worth it. Why would you go from 2% to 8%? You wouldn't unless you absolutely had to. So home builders have two issues going on. The first one is mortgage rates are super high. Second issue is the cost of everything: wood, insulation, electric, contract labor, materials, laborers, everything is up through the roof due to inflation. So even if they could mass produce houses, which they can, the problem is people they can't afford it. And, sadly, most people in America make less than $40,000 a year. So even if you have two people earning, quote, average $40,000 a year, that's $80,000 a year. That's nowhere near the $115,000 that you have to now earn in order to be able to afford a new house. So long story short is, these guys, even though they're doing the best they can and they'd love to sell as many houses as possible, they can't unless I guess they could if they said, how can we serve more and more people for less and less? So maybe if I were a home builder, I would look to find and build houses on land that maybe are not so big and grand, but get the job done and leave room for people to build equity in their home and own something. So the other huge thing here that this article points out is the median new home price fell 17% year over year to $409,000. That's a huge decrease. And the average selling price at $487,000. So basically, 17% on, $500,000 is a huge number. 17% on 400,000, huge number. 17% on 300,000, huge number. And for it to go down is a good thing. So I guess in that regard, the Fed could say that they're doing their job in that they're bringing down the prices of stuff, but, food isn't going down. Gas really is barely budged down other than what it does normally, cyclically. And income and wages aren't going up enough. And the other issue is that all this inflation, all these price increases that we've incurred or have been blown or dealt has not been going down. As a matter of fact, I'll be making another video. And if you've listened this far, please be sure to like, comment, and subscribe. It means the world to me. It helps the video. It helps my channel. I do this on my spare time. And basically, my goal and my mission is to help you make educated financial decisions. Other videos we cover economics, finance, stock market, housing market, and other good stuff like that. So home prices did fall, which is good. The problem with that, though, is that's that's middle class America's source of wealth is their home. And case in point, I my house was about $380,000 in 2017. I personally bought, and it was not sought out to be this way, but it's just how it happened, and it's what I would do again. I found the crappiest, most beat up house that was stuck in 1980 with green wallpaper and green rugs and unfinished wood floors, and everything needed to be updated. The house, like I said, needed to be completely redone. New roof, new siding, new insulation, new wood panels, everything, new gutters. But it was $380,000, and it was the worst, crummiest house on the block, and now it's the most beautiful house on the block, and it's worth about $850,000. I've sunk in a ton of money into it, but I have equity in it. And would I go out and, and the house is pretty much essentially paid off at this point. So if I needed to go get a new loan, right, would I do that? No. But if I needed to, and let's just say a year ago my house was worth $850,000, but now it's worth 17% less, then I'm going to be mad, right? That means I can take out less equity. And not only can I take out less equity if I needed the money, I'm going to have to pay 7-8%, but that's the price we pay, right? This is the price we pay due to all the free money that the government handed out and all the free money that the government gave to businesses. The list goes on and on, all these government programs, all the government getting bigger and bigger. But long story short is, at least, if you're a first-time home buyer or, if you're looking to parallel or something else of that nature, this is the lowest median price since August 2021. So in theory, maybe the Federal Reserve is winning on inflation. I don't think they are. I know they're not. I take that back. I know they're not. So what did I not cover? Mortgage rates. What do I think is going to happen with mortgage rates? They're going to go down, right? They're going to go down, but the offset to that is home and house prices are going to then reignite, right? I feel like the Federal Reserve is playing chicken. They know their time is coming up. The economy is basically on the verge of a crash, and once that crash happens, they're going to lower rates and go back to quantitative easing. But once they do that, then they start the print and press again. Inflation starts all over, and what happens? Assets go up. Unless we have stagflation, which is worse than inflation. So kind of cuts both ways. Rent versus buy. Using purely mathematical equation right now, it's more depending on where you are, but in general, it's much smarter to rent than buy. If for me, I'm a buyer. I like to own. I buy my cars. I own my house. I'm buying a building. I like to own. So, but economically, it's much smarter to rent than buy. What you should do if you are looking to buy right now, I would do what I did. I would do, which was what I was fortunate enough to be able to literally step in dog do. Somebody found this house that I was with at the time, and basically I'd look for a fixer-upper. I'd look for a fixer-upper that needed a ton of work. You can go redo it however you want to do it, build out the house however you want to build it, and you have equity in it depending on how dilapidated it is and how much money, that's assuming you also have money to invest back into it, though, of course, and you have the, resources and everything else. So it's kind of a catch-22, but if it were me, that's what I would do all over again. Where are interest rates going? Well, we covered that. And where are home prices going, right? So that's the $1 million question here. Are prices going to go up or are they going to go down? Well, like I said, you have inflation going up. You're going to have the Federal Reserve cutting interest rates. The issue is the economy is in the gutter. People are going into more and more debt, and we're basically a house of cards at this point. So I do feel, even though in theory, if they do lower rates, it'll get the housing market to move. But home prices have to come down, not just 17%. They have to come down substantially. And, to have a 50% increase from 2020 to 2023 in over a 3-year period to, have to earn $70,000 up to $115,000 is unbelievable. There's no words to it. And unfortunately, what goes up must come down. So I hope you found this video informative. Please be sure to like, comment, and subscribe, and hope you have a great rest of the night. Thanks.